Bahrain or Qatar. Both charge 0% income tax. Both sit on the same Gulf. But one hides a $30,000 annual trap that most expats never see coming. 2 Gulf neighbors. Both Arab kingdoms with zero personal income tax. Both home to fast-growing expat populations and oil-funded sovereign wealth. Bahrain and Qatar have spent the last 15 years competing for exactly the same client. The high-income expat engineer, the remote working entrepreneur, the wealthy family looking to keep 100% of their salary inside one of the safest financial centers in the Middle East. On paper, the two countries look almost identical. 0% personal income tax. 0% capital gains tax on most investments. English-speaking business environments. USD-pegged currencies. Easy international banking. But underneath the marketing, the two countries operate on completely opposite business engines. Bahrain allows 100% foreign ownership of companies in nearly every sector, a 9% corporate tax on domestic profits above 3 million dinars, and a 10% value-added tax on goods and services. Qatar requires a Qatari partner to hold 51% of any company outside its free zones, charges a 10% corporate tax on foreign-source profits, and has no VAT at all. Both Gulf states are members of the GCC. Both sit under Sharia commercial law. Both issue 10-year golden residency programs. So when a British fintech founder, a South African tax advisor, or an Indian family office considers the move in 2026, the answer comes down to 5 specific data points. We rank both countries head-to-head, and the hidden $30,000 trap decides it. Round 1 is personal income tax, which is the reason most expats arrive in the first place. Both Bahrain and Qatar charge 0% on wages, salaries, bonuses, and overtime. No payroll tax. No social security withholding for foreign nationals. No city or regional income tax. No capital gains tax on personal stock sales. No tax on dividends received by individuals. No inheritance tax. On paper, this round is a perfect tie. But the real comparison comes down to what expats actually keep after the full living cost. Bahrain applies a 10% VAT on nearly all goods and services, which was raised from 5% on January 1, 2022. Every grocery run, every restaurant meal, every electronic purchase carries a 10% hidden tax that effectively shaves 7 to 9% off net purchasing power. Qatar has never introduced VAT. In 2026, Qatar remains one of only 4 GCC countries without consumption tax, along with Kuwait. For a family spending $12,000 per month on goods and services, Bahrain's 10% VAT adds $14,400 per year in consumption tax. Qatar's 0% VAT adds nothing. On personal income plus consumption, Qatar wins round 1 by roughly $14,000 per year for a mid-income expat family. Round 1 goes to Qatar. Round 2 is foreign business ownership and company structure. This is where the hidden $30,000 annual trap lives, and this single rule decides the entire showdown for anyone planning to run a business. Bahrain is one of the most foreigner-friendly jurisdictions in the entire Gulf. Since the 2017 Commercial Companies Law reform, foreign nationals can own 100% of a Bahraini company in nearly every sector, including wholesale trade, retail, professional services, manufacturing, IT, consulting, and most regulated industries. No Bahraini partner required. No nominee shareholder arrangement. No sponsor fees. Qatar runs on the opposite principle outside its 3 designated free zones. Under Qatar's Commercial Companies Law, a Qatari national or Qatari-owned entity must hold at least 51% of any LLC, joint stock company, or limited partnership. The foreign investor is capped at 49%. In practice, this means every expat-run company in Qatar has a Qatari sponsor or partner on paper. The annual sponsor fee paid to that Qatari partner ranges from $15,000 to $30,000 per year for a small to mid-size LLC, and scales higher for larger companies. On a 10-year business plan, that is $150,000 to $300,000 paid to a partner who contributes no capital, no management, and no operational work. Qatar does operate 3 free zones. the Qatar Financial Center, the Qatar Free Zones Authority, and the Qatar Science and Technology Park. These zones allow 100% foreign ownership, but require sector approval, minimum capital commitments starting at $100,000, and typically suit financial, logistics, or tech companies rather than small businesses. Round 2 is a decisive win for Bahrain, by a margin of roughly $30,000 per year for any expat running a regular commercial business outside a Qatari free zone. Round 3 is corporate income tax and the treatment of foreign source profits. This is where the math gets counterintuitive. Bahrain introduced a 9% corporate tax for the first time in January 2025, but only on multinational groups with global revenue above 750 million euros, the OECD Pillar 2 threshold. Purely domestic Bahraini companies remain at 0% corporate tax. Small and mid-sized foreign-owned businesses below the Pillar 2 threshold pay nothing to the Bahraini government on trading profits. Qatar runs a flat 10% corporate tax on the foreign-owned portion of any Qatari company, applied to all net profit, with no small business exemption. A foreign-owned LLC in Qatar with $100,000 in net profit pays $10,000 in corporate tax. A similar Bahraini company with $100,000 in profit and revenue below the Pillar 2 threshold pays zero. The 10% Qatari corporate rate applies to 49% of profit when a Qatari partner holds the mandatory 51%, because the Qatari portion is not taxed. On $100,000 of profit split 51/49, the foreign investor pays 10% on $49,000, which is $4,900. But that savings is dwarfed by the sponsor fee of $15,000 to $30,000 paid to the Qatari partner. Net effect for a small business: Bahrain $0. Qatar minimum $19,900 in combined corporate tax plus sponsor fees. Round 3 goes to Bahrain for any business earning under 750 million euros globally, which covers virtually every expat-owned business in both countries. Round 4 covers residency pathways, golden visas, and family sponsorship rules. Bahrain launched its 10-year golden residency visa in January 2022. Qualifying paths include a $135,000 real estate investment, a retirement route for age 55 and above with a minimum monthly income, or a talent-based route for high-skilled workers, investors, and scientists. Family members can be sponsored under the main holder. Qatar launched its permanent residency permit program in 2018 and expanded it in 2023. The investment pathway requires approximately $275,000 in a Qatari investment fund or $1 million in Qatari real estate. The service pathway is reserved for individuals who have provided exceptional service to Qatar. For standard expat workers, Qatar issues a work residence permit tied to the employer, which expires when the employment ends. The minimum salary threshold to sponsor a spouse and children on a family visa in Qatar is 10,000 riyals per month, roughly $2,750 per month, plus housing allowance or provided housing. Bahrain's family sponsorship threshold is 500 dinars per month, roughly $1,325, lower by more than half. For a family with 2 parents and 2 children earning between $40,000 and $60,000 per year, Bahrain is the only Gulf country that allows family sponsorship at that salary level. Qatar requires nearly double that income. Round 4 splits. Qatar wins for ultra-wealthy investors with over $275,000 to deploy. Bahrain wins for working professionals and retirees with moderate income. Round 5 covers banking access, regulatory compliance, and the hidden costs that show up during the first 12 months. Bahrain hosts the Central Bank of Bahrain, one of the most sophisticated financial regulators in the Middle East, licensing over 400 financial institutions, including international banks, Islamic banks, insurance firms, and fintech companies. Account opening for a Bahraini resident individual typically takes 7 to 14 days with standard documents. Qatar banking is concentrated in 4 major institutions: Qatar National Bank, Qatar Islamic Bank, Commercial Bank of Qatar, and Doha Bank. QNB alone controls over 50% of domestic deposits. Foreign nationals can open personal accounts once they hold a valid residence permit, typically 14 to 28 days from application. Corporate banking in Qatar requires commercial registration, tax card, municipal license, and sponsor signature. Setup runs 4 to 8 weeks. On compliance, both Bahrain and Qatar are common reporting standard signatories and share financial account data with over 110 partner jurisdictions. Neither offers bank secrecy for international clients. Both countries also require economic substance filings for certain regulated activities, with penalties ranging from $10,000 to $50,000 for non-compliance. Bahrain has stricter substance rules for holding companies. Qatar has stricter exchange control on outbound transfers above $100,000, which requires central bank approval and add 3 to 7 business days to every large wire. Round 5 is a narrow win for Bahrain on speed, breadth of financial services, and easier compliance for mid-sized foreign-owned companies. The final verdict depends on what you actually want. If you are a salaried expat earning $40,000 to $150,000 per year, planning to live with family, and buying most of your consumption locally, Qatar wins on net take-home pay by roughly $14,000 per year thanks to the 0% VAT. Gross salary goes further in Qatar than in Bahrain for a working family. If you are running a business, a consulting firm, a law practice, a trading company, a small e-commerce operation, or a professional service that generates $100,000 or more in annual profit, Bahrain wins decisively. The 100% foreign ownership rule eliminates the $15,000 to $30,000 annual Qatari sponsor fee. The 0% corporate tax on small and mid-sized businesses below the OECD Pillar 2 threshold eliminates the 10% Qatar corporate tax. Combined savings for a typical small business run $25,000 to $40,000 per year. The hidden $30,000 trap is the Qatari mandatory sponsor fee. It does not show up on the visa application, the bank account, or the commercial registration paperwork. It only appears once you sign the shareholder agreement with your Qatari partner, and by then the company is already registered and the exit cost is even higher. Most expat guides and YouTube videos rank Qatar higher because the 0% VAT looks attractive on paper. But for the 80% of expats in both countries who are either running businesses or planning to within 5 years, Bahrain is structurally the better choice in 3 out of 5 rounds. The data does not lie. Qatar is the employee haven. Bahrain is the founder haven. And for the 25,000 to 35,000 expats expected to relocate to one of these 2 countries in 2026, the answer depends entirely on which side of that line you sit on. If tax strategy fascinates you, subscribe for more. Every week, we break down one country, one loophole, or one real workaround the mainstream channels miss. Hit the bell so you don't miss the next one. We'll see you in the next video.